Uh-oh. This chart just failed. It's a really important chart. It's the S&P 500. And the fail is pretty easy to see here. We printed a higher high, but then fell back below it. That's pretty simple. It's called a failed breakout. On the daily chart, there's one other piece of evidence, which is not really all that enthusiastic for me. We have 1, 2, 3, 4, 5, 6 candles in a row, which are all hollow. Today, it's a full candle. So, what does that mean? And where do we go from here? I think it's pretty simple. But as I do more videos, I'm realizing that what's in my brain is not always easy for the audience to understand. Expansionary candles for 6 times in a row 1, 2, 3, 4, 5, 6. And this is where we hit resistance exactly at this area. We printed a daily higher high, but did not hold it. And into the close, the bears did take over, even if you don't realize it, at least on that one candle. This one is hollow. So let's go back to the notes and see whether or not the doctor is taking his own medicine or if he's completely full of SHT. Here we go. On the 1-month chart, caution. We have a lower low, but failed to hold it. This is a warning. It is not confirmation. Bulls still have the edge with a record close, and the closing at or near the high implies a higher high. The question was, does it hold? It's the same thing for the weekly chart. So as I go here, I said, when in doubt, be patient. We're halfway to a bull market. So yes, I know today's video is red. Yes, I know more people click on red videos, but I'll give you the value because that's why you clicked today. So if we go here, we went last week, we printed a higher high. We closed above it. I'll show you this right here, side by side. So if we go to the S&P here, let's make it really, really simple because I'm a simple guy. If we have a look here, print the higher high, close above it, we get 2 out of 4. Okay, well, 3 out of 4 is what we did. Yes. We went above the previous candle high, but as of Tuesday's close, which is where we are right now, we fell back below. So now we're bullishly cautious. Oh, so a fail is not all that bad. No, people just like clicking on fail videos. They like traps, they like red videos, and you're still watching. So now let's get on with the rest of the show. So I would argue we're going range bound. We're sideways. And this is where it gets a little bit tricky because only the weekly chart actually printed a higher high. We were not even able to muster or to go to a monthly higher high and then fail there. We found resistance exactly before that. So we have 689.7 looking up here, 689, 685, 683. That's a lower high. That is not good enough for me. Remember, on the monthly chart, we already talked about how the monthly candle or the 1-month chart was implying a higher high. Where are the bulls? It's only Tuesday, so what do we expect them to do? Exactly what I just mentioned. So if you remember, let's go back to our notes now because the notes should be easy to understand. Again, second link in the description, 100% free. We already got our dip, if you remember. Peak to trough was just over 5%. That's guacamole, right? Grab some tacos, put a little guacamole on that. That's yummy. So after a 5% bounce, we were unable to form a higher high as of right now. So dead cat bounce to a lower high, lower low. That's where these red arrows come from. They might mean nothing to you. Yeah, they mean everything to me. Let's zoom out here and remind you of exactly what those mean. If we look here to the daily chart, I have a number of sets. So we're going to go here to the set 1, 2, 3. What do these point to? Low, lower, lowest. Low, lower, lowest. Low, lower, lowest. So if this time's different, it means that on the third bounce, we're not going to go for a higher high. That's all the bulls are going to get right now. I'm not sure if that's a volume climax anymore. So all the way down, we reversed it and went higher. It's a little bit tricky. So again, let's go back to the notes. What does it say here? Well, caution, right? It's a warning. It is not confirmation. So the bulls still have the edge, but we don't have the confirmation yet. Cautiously bullish. We have to be patient. When in doubt, be patient. You want to get paid? Learn a little bit of patience. It's really hard, but I promise you it's going to be worthwhile. Review the notes above. And remember, I provided both a bullish and bearish scenario on the weekend video. So please make a plan and then just wait for the chips to fall. Good luck to all. So now I want to show you how I use my system to actually do this. And I know that it sounds a little bit salesy, and that's because I am going to launch a sale. We have it open until December 31st. If you want to join me, fantastic. If you don't, let me give you a quick preview because you might think these dots are nothing or they're everything. Well, for me, they're everything. So there's 2 things that drive the charts for me. There's the fundamentals as we look here to the key dates. I call these the key dates that could drive the chart. We just go to investing.com. We go here to the week, and we look and see what can really drive the chart. High volatility. Volatility just means it has the potential to either move the chart really up or really down. So far this week, we got Jerome Powell spoke, and he did not actually give an economic outlook. So the market shrugged that off. Overnight, we got a little bit of a bid, as I talked about in yesterday's video. Going into tomorrow, this is where, again, you can go through this sheet if it's helpful. What I try to do is to take all of that and then add in the dates that I find very important here, the ones that I care about. We got through this one. Did you even hear about it? No? Then who cares? Let's move on. Now we got the third. We got ADP non-farm payroll coming in on the third. And remember, the Fed's focus right now was on employment, less about inflation. It's not that it's not about inflation. So ADP non-farm payroll, that's probably important. If we move forward here, Friday number is the important one after that. So we got through one hurdle. Okay, now we're looking forward to tomorrow, and then we're looking for initial jobless, but notably the core PCE on Friday. Here's what I find when I look at it. Again, we have a forecast or an expectation. That's what it says right here, the forecast. It's 0.2. 0.2 is the previous number. It's below 3, even if it's a little bit elevated. But if we go here to GDP now, like this is a really strong number, 3.8%. So that means we have nominal growth. Or when we take the GDP and we subtract the core PCE, which is what the Fed looks at, there's positive growth. That means the economy is actually growing, even if you don't feel like it's growing. If you're not a computer or a data center, well, yeah, the economy is not so hot right now. So that's what the important part. So if we're wondering what could drive the chart higher, it's really just that. The economy's strong. The last couple of times we saw these prints, they made the charts go up. So I believe if there's going to be a sell-off, again, it's a belief. It's not the system. The system tells me what I got to watch for. If this comes in on Friday and we get a dip into Friday, we're probably going to rally into Friday is my guess. If we don't dip into Friday, I think we're going to sell off more. What I want to see is something called an opposite move. I want to see an opposite move where we find out where support is. Can we dive down to that weekly higher low and then snap back into Friday? Hey, the earlier the better. I just told you I see the first sign of weakness here. I see a weekly fail. I see a lower high. I see a full candle. That's 3 things. It's just a warning, though. It's not confirmation. So hollow candle means dip buying happened. But if we look here, like where is support? Oh my goodness, it's at 661.6. Yeah, that's pretty far down. And I summarized that for you right here. So we made it to a weekly higher high, but then we fell back below. That's called a fail. Oh, and we're red on the week? Yeah, because we're below center. Oh, so weekly levels are going to include the 50 DMA, roughly 670. And then we got 661. It looks like I made an error here. So 661 is the one after that. And then I think it's 651 for the monthly higher low. Anyways, here's what happened today. On our system, I'll show you exactly what happened. And then I have some trades I want to show you. So if we go through here, S&P 500, algo, we can see we actually went below 25 on fear and greed, back above, back below, back above, back below. What does that mean? Let's go here. It means this. It means we're trying to break here, but failed to hold it. Oh, it failed. Failed here too? Yeah. If you could please do me one huge favor and consider smashing that thumbs up or subscribing to the channel, I would greatly, greatly appreciate that. So that's literally what a fail is. We made it above. I checked it off. I'm like, oh, that's really notable to me. Made it above, back below, back above, back below, back above, back below. Yeah, it's failing. It's trying, right? I think I can. But it has not been able to so far. Only takes one more point. And remember, if we can actually make it out of extreme fear, the snapback might happen. But high, lower, high, lower, high, lower, high, lower, low, low, lower, low, lower, low. The onus is on the bulls to fix the charts. Even if we're near all-time highs, people are a little bit scared. That's the first thing we can look at. The second thing we can do is just look at our dots. Our dots here are traffic lights. Green is good. So what this tells us is that the one-day chart is a buy. Again, for SPY here, or the chart that I focus on for most of the videos. The one-day chart is a buy, one-week chart is a buy, one-month chart is a buy. So this means that we need roughly 2 candles to the downside to actually lose that area. An easy way to think about this is, if you look here to the weekly chart, do you see a moving average? I do. It's a blue line. So how far are we from it? Well, we're pretty far. So from 680 down to 614, well, that's the short-term price. If we come down here and you're scared about that, that's what I said in the last few videos. I said, if you're scared of us going down to 614, you need to manage the risk up here. What that basically means is this. Again, free notes. Go click on these if you want to see them. It should say free notes. And there's no paywall or nothing. You want to make the Bennies or the Benjamins? Click on the link. You'll find it there. Ask yourself this. Go to how do I make a plan? I keep talking about this. So if you're still watching and you don't have a plan, please do it now because there's scenarios through here. Review your account. And remember, it's okay to be wrong, not okay to stay wrong. It's okay to be stupid sometimes. Just don't stay stupid. That's the point here. A plan is very helpful. It is. If we go here now, though, this is what people are really wondering. What should I do? Should I wait, buy, or sell? And you're probably regretting. If I look at some names here, like let's pretend we go to a name like Oklo. I just know because I saw the alert today. I'm like, I'm not convinced this is it. So I'm not trying to take a victory lap here because I don't own the stock. I actually like this one. But when the pattern aligns with the psychology, I'm not so sure. So when people come into the stream and they tell me, oh, you know what? Oklo's a great company. It's going to come back. I'm like, F. I don't like that at all. I like it less than I did before. And if you remember, we were talking about how we have the potential for a head and shoulders here. Head and shoulders, knees and toes. Well, the knees and toes are done. It came all the way back down here. That's really painful. So the joke's not funny. The joke is funny if you're not in. If you're not in, oh boy, that stings. Yeah, it does. From high to low, or from roughly 190 down to where we are, it lost 60% of its value. If you're like, Justin's a wussy, but I'm not a wussy. Well, maybe you are. You just don't know it. I make fun of myself. So if you're like, I kind of feel like a wussy too. That's okay. Do you like making money? Yeah, me too. I like making money more than I like being right. Oftentimes, you're not going to be right and make money in the same trade. So what do? You need to make a plan and then avoid what you're going to regret. So in every scenario, again, it's right here. What do I do? Should I wait, buy, or sell? Click on that and go to here and just ask yourself, which one are you, number one or number two? And I give you the cop out here too. Go down to the area where you currently are. Are you watching the stock? Are you building a position? Are you in a full position? And then just answer the questions in order. You got 4 options in this scenario here. So let's pretend you're watching the S&P and you're in a full position. Well, you can either watch it, you can trim, or you can exit. That is it. It's a binary choice. Option 1, sorry, not binary. It's a fixed choice, 1, 2, or 3. And then if you choose to say trim, what are you going to do? A small trim, a tiny trim, small, medium, large. And then again, go back up to the top. What are you going to regret? Ask yourself that question, then go down to here. Because what we suggest is something like this. Here's an example. If I was not already in this position, would I buy it right now, right now with fresh capital? If the answer is no, it's time to exit. If I was thinking of exiting, maybe I'll make a large trim. That's what I do. If I go to here and I look at my 401k sheet, again, my hugely bigly account, which is worth a whopping $7,000. I know this guy's so rich. I am rich. I like this account. I love it. If I look here, though, you wonder why I got so many tiny little baby positions. It's because sometimes my best performing stocks are the ones that I just keep trimming them and trimming them and trimming them. And I'm really thrilled with that. Like BW here, it was as much as 7% of my portfolio. And if all I did was diamond hands, I would have been thrilled with that because it was a 7% position and it grew by 5%. That would have given me 35% total return on the year from that one trade. But that's not what I did. Instead, I funded the position and I keep trimming and trimming and trimming because all I do is ask myself these same questions that I'm showing you. So I'm not trying to give you some different recipe than I use for my account. This is 100% free too. I like the signals from the system. And this basically tells me that on the 1 week and the 1 day and the 1 month, man, we got to sell off for 2 periods before we go down. I showed you this right here. And I'll do this on the fly right now as a very quick example. So there's something called the ATR, or the average true range. It basically means what a stock moves on average for each candle period. This candle period here is a 1 week. That's why it says 1W. So in roughly 1 week, the S&P moves on average by 17 points. You can see the volatility in the chart right here, up, down, but on average, it's 17 points right now. Let's do some really quick math. All right, let's do it. Let's do it right here. We can go to S&P is trading at 681. We got 614 is our downside. So we're going to go 681 minus 684. What does that give us? Well, it gives us our downside to support the short-term price. If you're going to get scared of the short-term price, God forbid we go down to the long-term price, that's at 497. Oh my God. All right, go to the calculator. Let's go to the calc. All right, hello, Mr. Calculator. Let's go to here. So we get 684 minus 614. We got 70 points in downside. So we got 70 points here. I'll just do the calc, right? That equals 70. All right, and then 70 is how many points we have to move, but the average true range or the average move on the stock is 17 points. So let me go 17 divided by 7. We would have to sell off for 4 weeks in a row at the max of the ATR to the downside. If this confuses you, what it tells me is that if we went red for 4 weeks in a row at the high end of the average true range to the downside, or we're bearish for 4 weeks in a row, we're still above the short-term price. You should be looking to buy. Really? Yeah. So when I say I'm a wussy, what I'm really asking myself is, do I see the equal amount of upside as I do downside? I personally do not, because I see lower highs. I see us range bound, as I alluded to before. That is a sign of capitulation. It is not confirmation. I already gave you the notes. We have to close above on Friday. If we don't, it's close, but it's no cigar. So what I'm really asking myself is this: how big of a decline is that? Well, it's not nothing. From where we are right now, that's a correction. That's 10% down. So for me to feel confident holding on right now, because I'm not very confident right now, what would I need? I would need equal upside as I do downside. So if I'm prepared to hold on for a 10% decline, am I prepared to hold on for a 10% rally? Or do I see it as likely? Oh boy, 750 seems like a pretty big number right now. We got to make it through 700. Then we got to make it through 694. We have to go to new all-time highs first. We got to go to 690, then 695, then 700. Then we can start marching. I suspect I will likely get a chance to buy back around this price if we're really going to go higher here. It should pop flag and backtest this previous high. What was resistance should turn into support. And if it doesn't, that's okay. Remember, we're looking at a range of outcomes, or what could go right what could happen if we're right, what could happen if we're wrong. I'm spending more time today because I really want to show you that I'm not trying to sell you a system that is meant to just be marketing. We've had it shut off for 6 months because I don't want to sell something I don't use or I don't have confidence in. I am thrilled with my performance. And I'm only going to show you some trades now because you've actually watched all the way till here. So now you should understand what I'm looking for. When I go to here, I'm like, well, if we sell off for not only just 2 days, but 2 weeks, we get an early warning. I showed you there's 4 weeks of declines at the ATR if we're going to slam down to support here, which happens to also be our previous high. This is an area where I am excited to buy, and I got tons of cash. I got 88% cash ready to deploy. I'm up at 20% on the year. I am in no rush to force trades right now. I got some things that are working, and I am thrilled about that. This is not a reversal. It's a bounce. It's a lower high until it's not. It's been failing. Hasn't failed. So if we go back to here, what am I doing? Well, I keep telling you, if I'm in a full position and I'm like, I want to exit. What I often do is I just make another trim. I just sell half. So I can let my winners run, because that's how I like to trade. So if now we go back to here, just thinking about this, I warned you there's 4 potential weeks of downside just to get to the short-term price. I also told you there's 2 months worth of selling to go to the monthly chart here. Oh my God, you're going to do that same thing on the monthly? I already did it for you. I showed you this before. But since you're still watching, like I said, let's just ask ourselves this. If we slam down to the short-term price, which is the blue line, and like we do this very frequently, we get too high, what happens? Get too high, test the 50. Get too high, right back down to the 50. Then we go below the 50. Then we go below the 50. Well, it doesn't mean we have to bounce on the 50. But that same thing that I showed you with the daily chart where there's that 1, 2, 3. If we go back to VOO, they should have the same thing here from the weekend where 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. Those are waves of declines. Oh boy, right? That's pretty far down from here. If that's going to be the lowest low, yeah, wowzers. That's more than a bear market. That's a 30% correction. That's worse than 2022. That's worse than what happened here in April. And I don't want to be caught offside. That's why I call myself a wussy, because I don't see equal risk reward to the upside as I do to the downside. For me, again, I'm a simple guy. I like simple things. This right here is my system. And what I'm looking at is what's the risk reward. So right now on VOO, the position is fully paid for. I'm up by 30%. But as of right now, I'm risking $1 to make 80 cents versus my predefined areas. And these areas here correspond with the green, which means an area to consider buying, and red, which means an area to consider selling. So according to my system and my levels into the weekend, again, this is the way that I manage my account for reals. It's a real account. That's why it's only $7,000. I'm not trying to pretend I'm some millionaire YouTuber. I tell you, I got all the secret answers. Click on the webinar and the link in the description, and I will give you all my magic cheat codes. And then you go there and it's a paywall. Because surprise, surprise, they don't really trade to make money. They sell courses to make money. Really? Yeah, I know. Because the receipts are not there. If they had the receipts, they would not be telling you what they are. They would be trading their system. Oh, so let's go here. 90 cents on the dollar. Okay. Versus 3 to 1. So when I look here to a name like Say, and I just bought FDS recently, actually, that's a good idea here. I see 2.8 risk reward, which means for every $1 I'm risking, I see upside of 2.8. So I flip a coin, I make 3. I flip a coin, I lose 1. Hey, that's pretty good. My blended risk reward is 4 to 1 right now. If I go to my platform now, that's how I pair what the S&P is doing with my individual holdings. If I go here, we can see the risk reward if we just go click by sort. So right now, 42 to 1, 6 to 1, 4 to 1, 4 to 1, 4 to 1. My blended risk reward is 2.4. I can see immediately which stocks are close to exiting because they got a low risk reward, which means they're significantly closer to their target than they are to their stop. So if we look here at, say, BHP to make an idea a little bit more easy to digest, the average we bought it at was 53.68. You can see the average right here. We entered. So we entered it the 25th of the end of the month. We got a trim, which means that now we sold half our shares and we can't lose on the position. The current price is 56.27. Our target is 56.4, which means we could make an additional 0.04 on this trade, or we could go all the way back down and lose 2.4%. Oh, we can give back all the profit and then more. Yeah, it's an algo alert, which means we could lose up to 1% on the trade. So make 0.04 or lose 2.4. Whoa. It's still going to be a scratch if that happens. We have our unrealized gain and our realized profit, which will offset it. But that's what I'm trying to do. I'm doing a mental calculation in my head. Am I risking $1 to make 4 cents? I was risking $1 to make 10 cents, 20 cents, 30 cents, 40 cents. You might not know that. You don't know how much risk is really in your portfolio. And this is where now I can show you a couple of quick examples, because even though I sound like I'm a wussy in every video, and again, I make fun of myself, so you don't have to feel bad about making fun of yourself, because I know a lot of people don't actually know what they don't know. So let's go here. If I look at these names here, what did I actually exit today? I know I had some stocks that actually got out. So if I go here to my account, FLNC, we held it for 5 days. We made 20.51%, and the gain on the account is 1.49%. That's 1.5 months worth of work for SPY on one stock we held for 5 days. Whoa. We got a trim on Dash, and the realized gain on the portfolio, 0.5%. Hey, not bad. Okay. We go up here to Boeing. This one's an exit. So it's not a trim, it's an exit. We held it for 5 days. The profit is now 12%, and we made 1.74% on the leftover position. Let's look at Boeing. So we go here to Boeing. Let's zoom out. We can see that we purchased it on the 26th. We trimmed on the 27th for 3.8%. We trimmed it at 184. And now from our average of 182.44, we've exited at 204.33. Our target's been hit, 12%. And please remember, we already got our target on SPY. So from my perspective, the cycle is complete. We got our exit on the 27th. So since then, I'm like, well, we either have to see a higher high, which is continuation, or I wait for my system to reset. That's all that I do. It was a perfect signal. We made really good returns. Look, we're still up 17% unrealized. I'm showing you 1.7% gain on the account, a realized gain. Again, in a paper account or a portfolio account, which we're still testing. I'm not trying to pretend like I'm something I'm not, but if you made 1.5% today, another 0.5, that's 2%. Add on 1.74, that's 3.7%. Holding on for 5 days, 5 days, and 5 days. In 5 days or 1 week, we made 3% just on those trades. We zoom up more. We got a trim on Lumen, another 0.28%. We got an exit on TSM, another 0.21%. That's 3.5%. And that's real. That's in our account. That's one way of trading. Again, I think this is too complicated for people. There's a lot of data on here. There's a lot of going on. This is how I make my decisions. It might not be how you make your decisions. I need all of this to make a wise decision. If I go to here, it's the exact same thing. Every single row And every single color is meant for me to know that I'm respecting my plan. If I'm going to trim something visually, I'm already told exactly where to focus. It's on the ones that are red. Red is bad. Remember? If you drive on the road, red is bad. Yellow means caution. Green is good. Yeah. So there's lots of green on here. Yeah. Over here, there's lots of green. There's some red. That's the realized positions. But over here is where I'm focusing. It's right here. Just like on my system, if I look on the right-hand side, I see the risk reward right here. It's the exact same thing. How much am I risking versus how much can I make? And that is basically it. That's how I manage a real account. And honestly, trading stocks is really hard. So what I'm trying to tell you is that I'm not full of SHT. I'm trying to show you with real trades and real examples what I'm really doing. Here's 2 trades we talked about. There's DJT. We now got a free trim on it, which means we cannot lose. Another 1.7% on the portfolio from one stock. We look here to ELF, same thing. Another 0.4% on the leftover position we got. And I don't think about these stocks. If we go back in time right now, let's see how they're doing. DJT, ELF. What happened here? Did I make a typo? Get out of here, search. Oops, we need a comma, not a period. That's what she said, right? Anyway, so what happened here to ELF? We might have had an error on the system then. So we've been fixing some bugs. I apologize ahead of time. So I'm not going to try to pretend like we're perfect. We clearly made a mistake here. Let's go to this account. Maybe that's one. This is the one we're looking at. So just ignore that last thing. There's an error on more than one account. Let's just look here. So the trim at 7676, we got our trim. So now the worst that can happen for us is we go back to our profit. Since you're still watching at 26 minutes, let me show you what happens here. We can go to stock chart, which means this is where the idea was generated. We call that a screener. So our screener found this idea. We purchased it like I talked about, but now there's an active idea with a position on. So we can go to here and look at this one now. So we can see that here's what's been happening since the time we got the alert and we entered. Here's our average price. Is where we bought. We bought it on this day right here, I believe, on the 24th. Let me just double check. Yeah, I bought it here on the 24th. So if I go here to levels chart, it's the idea. So we bought it right here, which is our average. And now we've managed to go to the trim. And that's great. We can't lose. All that's going to happen now for this stock is we're either going to go to here, which is our target, or we're going to go to our stop. So riddle me this. If I showed you this on the chart and I said, hey, if we're right, we think it can go up to here. Whoa. That's like really high, Justin. It is. That's why I'm still holding on to it. And if we're wrong, we just give back the profit we already made. It's a scratch. Yeah. Oh, that's like pretty good. That is like pretty good. So we could give back our profit, or we can make 4.3% more. Whoa. That's like pretty good. Yeah. Risk reward right now is 6.3. So again, we look at the chart. Visually, what that should mean is that from the current price down to the stop, there's 6 times more upside to go up to here. If I flip a coin and I'm right, I make $6, and I'm wrong, I lose 1. But if I lose, I lose 1, then I'm giving back the 1 I already made. Oh, I don't trade like that. Well, you're probably watching this video because you're looking for guidance, and I'm trying to give you exactly how I trade. So looking at here, 1.8, we can still make roughly $2. But I like 6 better than 1 or 2, sorry. So if we look here, it's exactly what we're showing you. We got it in right here on the 24th, same date as the other one. We got our trim. It got through the blue line, but now it's back below it. All that can happen now is that it goes back down to the stop at 10.03, or it rises up to the target. Everything in between is noise. There's no action for me. So I haven't looked at this trade since I mentioned it last time. Why? Because the stock works for me. So it's either going to go to the stop or to the target. That is it. So it came down a little bit. The last time I snapped this shot, it was here at 71.25. But the further down it comes, the risk reward actually gets better. We're approaching support. That's the problem with the S&P and what I just told you. We're pretty far from support here. So let's just do a really quick calculation like we did on the weekly. If we were to decline by 30%, it's 25, 30% from here down to support. Are you going to be a wussy there? I would be, because I told you I am a wussy. I don't like 30% declines. That's all my gains for the year. I'm going to be pretty pissed off. Okay, so if I'm giving potentially, let's go from the high right here we are, all the way down to the bottom. Well, that's a 26% decline. So from where we are, what's a 26% rally? Whoa. 860. Yes. And that's only a 1-for-1. I don't like 1-for-1s. If I'm going to risk $1, I like making 2 minimum. Why? Flip a coin, I make 2. Flip a coin, I lose 1. Hey, I like that. These trades are live. But as I go through here and look at the ones that I like, I sort by risk reward. So I like FactSet. I bought it. I told you. It's 5.8 to 1. I like 5.8 to 1. Oh, that's all you do? That's all I do. This one I buy on the end of the month. So I can go here and buy. I already own it. So I can't do anything. Oh, that's it? Yeah. So how do we maintain a 2-to-1 risk reward on the S&P? We have to rally by 26% times 2 or 52%. Oh. Oh. Oh, wait. That's 1,000 on SPY. That's 1,000 on SPY. So for me, what I'm trying to preserve, keyword here being preserve, is my capital. I've mentioned this many times. I'll talk about it again now. There's 2 types of capital. There's your bank capital or your cash, your money, but also your big, beautiful brain. Maybe you got a silky smooth ape brain. Maybe you don't. Maybe you got a stupid human brain, right? Your monkey brain. Those are the 2 things. So if I have a lot of stocks and I'm working for them, and then I get really stressed out, like the market starts tanking, I am unable to make decisions. So what I try to do is to sweat early to avoid sweating in the moment. Like I told you here, if I go to Oklo, and I bought this thing at $9. Of course I wish I still had it, even with the decline. I wish I still had it. I bought it right here at $9, all the way back over here. What did I do? I sold it. I think I sold it up into here. I'm like 9 to 60. That's great. I avoided this decline. I was a wussy. I did not get back in. And that just means I rolled into a different idea. I'm not trying to extract every dollar from every stock or to hold on just because I'm an investor now. I got diamond hands. No. I got money hands. I grab the money and I effing run out of the store. That's all I do. So here, now I see a good opportunity. And very last thing I want to show you here, because this should hopefully round the story out. I don't like being mean to people, but what I do like is I wish. When I was being a complete idiot, when I first started trading, I wish someone would have went through the screen and gave me a big slap in the face. Justin, stop being an idiot sandwich. Like Mr. What's his name always says, the Gordon Ramsay. He's like, oh, you're an idiot sandwich. I'm like, yeah, that was me. I did that for 5 years. I don't ever want to go back to that. If you're feeling like a perma bull or a buy in the dipper or a buy and holder or an average downer, you are literally going down the slope of hope. Oh, yeah, Justin, I got hope. I buy NVIDIA at a nice price. Well, you could have got a great price on Oklo too. So head and shoulders, knees and toes. Fundamentally, it's a fantastic business, but this pattern for me is not one that I like. If we go back here for 1 second, I'm not trying to pick on the stock. I'm just telling you that I'm familiar with it. If it starts doing lower highs and lower lows, and it forms lower highs and lower lows again, it's going down, whether or not you want to agree it. And exactly where the technicians like me watch is exactly where rejected. Try to pop over, fail, and then it dropped by 50%. Down, dead cat bounce exactly to resistances. So we found support where we expected, around the 50 MA, around the key relative low, but we also found resistance exactly where we expected. And the bears won. Down, dead cat bounce down. A lot of charts look like this. We talked about NVIDIA. Again, I don't want to pick on these stocks, but look, do you see the same thing here? Objectively, head and shoulders, knees and toes, shoulder, shoulder, head. You see the monster bounce and the rejection? And now we're here and we rejected on roughly the 50. I do. It's not because I want NVIDIA to go down. I like NVIDIA. It's a good company. I like Oklo. It's a good company. It doesn't mean the chart's going to go higher right now, though. There's warnings on here. And NVIDIA is a little bit more peculiar. And I'll show you the reason why. If in doubt, zoom out. So we can draw a nice little head over here. It pokes over. It falls back below. But this is a chip. So we go to SMH. Oh, chips are not in a head and shoulders. They were up into roughly here, which was the end of last week. But now it popped over. We're green in the week. So if NVIDIA is the king, NVIDIA is the biggest stock, NVIDIA is leading, as it's supposed to lead semiconductors. Remember, leaders lead, followers follow. Well, the sector's up. So there is underperformance for NVIDIA relative to SMH. Another way to look at it, you can go NVDA divided by SMH. Oh. So if SMH is going to what happened there? If SMH is going to a really high area and NVIDIA is not, It means there's underperformance. I call that relative strength. I don't like RSI. I like calculating it this way. So here's what's happening from my perspective. It's AVGO. AVGO is stealing some thunder from NVIDIA because they can make custom chips. They call those ASICs, like a TPU for Google. So this is what's dragging SMH up. The sector or SMH is doing pretty good. It's not doing bad. Chips are bullish. NVIDIA is just not as bullish as its peers as of right now. That's what it's telling me. That's how I read it. That's it. That's it. So we go here to NVIDIA. Fantastic company, beautiful company, bigly company. How much is it worth? 4.4 trillion. We go here to AVGO. Hey, it's a pretty big dog now. It's worth 1.8. That's pretty big. So it's helping support the market. Yes. So NVIDIA down, but Google up and AVGO up. That drags the market up. So again, going back here to NVIDIA, I don't want the stock to go down. I want it to actually go up. I know a lot of people own it. I know a lot of viewers watch it. And the questions I got this morning, I'm like, oh my God, it's exactly what I don't want to hear. People are saying, oh, diamond hands, I'm going to hold on for 3 years. Ooh, wait until you get tested. They're like, oh my God, I can't believe I get to buy NVIDIA. I'm a bull now. I get to buy 5% lower. I get a Black Friday price. Last time there was a 5% dip on NVIDIA, it rallied by 30% after. I'm going to dip my toes in. Oh yeah, I'm going to buy and hold. I get to buy 10% down, 30% down. Oh yeah, let's go. Oh my God, it's down 50%. That's Oklo. What do? You sell at the bottom. I'm waiting right there like a lobster, like a crab. Ooh, yummy. You got garbage for me? I love garbage. I make it taste real good. I would really encourage you to go through the materials, even if you don't want to join me, because I've given you 2 ideas already. I've told you that the way that I make these ideas work is the exact same way I do it for SPY. It's the exact same thing I do for every stock all the time. If you go here to our help center, it's just help.thealgo.com. There's a ton of resources. Click on the different articles if you want. There's algo features. You can learn about our dots. You can learn about my portfolio. You can even download my spreadsheet that I showed you for free. Just make sure you copy it, please, so other people can still use it. It's right there, though. I give you a free video, no paywall. Here's exactly how I use my account. Don't pay me a cent if you can't afford it or you don't want to. But please, go read the resources. Download the spreadsheet. It's free. Someone's been editing it again. So here we go. Here's the dumbass. Here we go. So anyways, here was my template as of Q2. So you can go and download it right now. It's exactly what I showed you. This is just an account that's updated from before. Okay, that's it. That's it. It's a free resource right here. There's even bonuses in here. How to manage the risk reward. Oh. Go back. You can go to here. Look at our stock market cycle. What's this? It's how stocks work, even if you don't know it. There's this. We translate it over to this. Markets don't move on logic. They move on emotion. People like NVIDIA. So what are they doing? Everything they shouldn't. They got hope when it's sloping down. We peak on good news and bottom on bad news, generally. If you go through each one of these things, it's everything that I keep saying all the time. The crowd sells pain and buys comfort. The professional does the opposite. And the professional doesn't mind when people say, oh, well, yesterday you said you were bullish. No, you say you're bearish. Yeah, I'm here to make money. If the money-making opportunity disappears, what do? We follow the traffic lights. Very last analogy. Have you ever been on the road and there's an accident you can see happening because you know the rules of the road? Like on the highway, you're like, oh, well, okay, well, they tell me there's this warning for deer ahead, and it's winter where I am now. So I'm like, oh, if it's winter, I already got to be more cautious. I better have my snow tires on. And it's telling me now, caution for deers. I can't draw deers. I'm not even going to try. I will put D because everyone loves the D. So there's a deer right here. Deer for the next, let's say 10 miles. I'll use miles because Americans are watching. All right, so it's winter. There's deer for the next 10 miles. It's now dark out. There was fresh powder on there. Should I be on the highway in cruise control? Or should I go, you know what? I'm going to tap the brake. I'm going to go out of cruise control. I'm going to slow down a little bit, and I'm going to be aware of my surroundings. That's literally what I'm telling you. If we go back to here now, again, I'm still making money. I'm telling you that the system still works. On all my accounts, it's working. But I'm being cautious. Cautiously bullish, right? I got my foot over the gas, not on the gas. I'm not in cruise control. I'm ready to go once I get the signal. Once those 10 miles are done and the deer the deer time is gone, then I'm ready to go. Otherwise, caution. And I know exactly where I'm stopping. We fall below 650. I'm pulling over to the side of the road and I'm saying I can't drive anymore tonight. There's a whiteout, there's black ice on the highway, there's deer. Man, I'm stopping. I'm gonna light a little candle. I'm gonna sleep in my car tonight. Or if I can't make it to a motel, that's what I'll do. Does that make sense? Again, a real trader giving you real insight and not asking you to pay me unless you can afford to and you want to. Because what I'm doing is I'm trying to give you most of the value for free. But if you want to see every move that I make, that's when you have to sign up. It's for ease of access. It's not like I'm trying to say that I'm only going to help you if you pay. It's that I'm running a business too, right? I got to take care of myself. I've been shut down for 6 months. So we're open until the end of the year. Come and look at it. Take advantage. Come to our stream tomorrow. Take advantage of all the free resources. And just because I'm feeling generous today, I'll show you one more quick thing. I'll show you 2 stocks I actually purchased yesterday in my 401k account. So let's go to here. Let's clean the channel up. I bought FDS and STLA yesterday. Let me show you the live account right now, and I'll tell you the reason why I bought them. I bought FDS and I bought Stellantis. So I'm up by 2% on this one. I'm down by 1 on that one. The markets are on the week. These stocks are higher for me on average, right? I made $1. Yeah, $1 make you holla. Blended risk reward right now, 3.9 divided by 2, roughly 2 to 1. Okay, that's not bad. No, but here's what I did. I said, I prefer to coast from here and respect my plan. Oh, that stupid plan thing you keep talking about. Yeah, I need it. You probably do too. I'm very happy with my 20%. Little smiley face, right? So happy with that. Slightly smiling face. I'm rotating a little bit here though. I exited Tilray for 92%. I trimmed Playboy for 41. I trimmed EWZ for 21. And then I trimmed TE for 166. That raised 1% cash in my portfolio. I rotate that over to here. It's called rebalancing. And then I bought Stellantis for 0.5%, which means I'm following this Invest Whisper. And then I also bought FDS, which means I'm following the Algo Whisper. You're confusing me now. Can you show me what that means? Of course. Let's go to here. Let's go to ideas. Let's type in FDS and STLA. So I saw these 2 ideas and I didn't click buy. That's what this portfolio does. I entered FDS. I did not buy Stellantis. I don't like that number for this idea. I like FDS, but I'm taking that and applying it to my 401k account. These are separate strategies. I know it can be a little bit confusing. So I like these, and I'm only buying a tiny sliver because they're still whispers, which means it's trying to go up during this candle period. It's not done yet. It needs to hold into the last day of the month, which right now it is, but will it? I don't know. I'm front running it. Same thing with FDS. I'm front running it. There was an alert last week on FDS. It's another follow through alert. So if I go to here, exact same thing. If I go to STLA, I go to the stock chart. This is the screener that it found. Hey, I love curls. Does that look like a curl to you? It does. Our system refines that down to an idea, which is a yes, no. On this one here, it's pretty hard for me to say yes. I'm not excited about it. Why? Well, that's the target. That's the stop. I don't love that. So I massage the numbers because I can, again, it's my system. I know what's happening here, but I'm explaining in full context why. If we go to FDS, I like this one better. That chart looks great. Okay, it does look great. Let's see what the idea is. So we trim it here, a little bit higher than the recent high, and then, whoa, it can go all the way up to there. Yeah, I can. 414. If I'm right on this one here, I can make $6. But here's the curious part. FDS should be due for, let me just double check and make sure it's due for an alert here. Maybe it's not. So either way, now I know that I'm risking $1 to make more than 1. I don't like buying SPY if I can't make at least $2. So how can we justify that working? All right, this is a really long video now, so I'm going to show you one more thing because I think that if you're still watching, you'll appreciate this. Let's go to VOO. So right now, my average is 483. The share price is 626. If we come and it's 0.8, but here's the difference. If the price declines to say 600, that number gets really different. That means we're approaching support. It is better to buy. It is more advantageous to buy. If the market declines by, say, I don't know, like say the 615, the number gets better. Now it's 2 to 1. I like seeing 2 to 1. If not, I don't like putting risk on. I'd rather hold it in cash, which is this right here. The very last thing I'll leave you with here is, again, the free resources. And only if you want to come join me, then click on the link to go to thealgo.com. And before you pay me, watch this video here. You didn't mind watching a 45-minute video? Inside of here, that's me. You can go through and see exactly what I do. I build an algorithm. So what is an algorithm? I talk about my report, which is how I generate my ideas. I talk about traffic lights, which I did here. I'm not telling you, oh, well, you know what? When you drive on the road, red is bad, yellow's good, yellow's caution, green is good. I'm not trying to tell you that, oh, well, ignore the lights and follow me because I have all the answers. Red is bad, yellow means caution, and red means good. No, I'm trying to make it simple to understand. And then I even walk through exactly how I generate my end of day report or how I get my ideas. It's time stamped here too. I talk about the algo cycle and be familiar with those. And then I push forward to my algo portfolio. I was at 8.2 and then I went to 17 and 27%. You want to see how I do that? It's by literally just doing this. I just follow my recipe over and over. Exactly what I showed you. A little bit of math happens, right? We got a little bit of algo magic. And then we take this and turn it into an order you can click buy on. And then I also show you how I take all of this and I apply that to my 401k strategy. There is an overwhelming amount of free content if you choose to put the work in. If you want to get the cheat codes and see exactly what I'm doing with a little bit more help, access to me, 5 minutes a day, and everything else in this list here, that is the reason why you want to go to thealgo.com. Otherwise, I very much look forward to seeing you at 8:30 a.m. tomorrow. And I do go through live free Q&A every single morning at 9 a.m. Thanks so much. I'll see you on the next one.